Live now to Hong Kong, CNN's Kristie Lu Stout. And Kristie, stock markets in the US rallied on the news. What's the sentiment right now in Asia?
Yeah, the era of Fed tightening has begun, and markets across the Asia-Pacific region here are factoring in this new reality. On Wednesday, as expected, the Fed hiked interest rates by 1/4 percentage point in order to tame inflation. It's at its highest level since the 1980s. And they also announced a series of aggressive moves in the year ahead in order to tame rising prices. Let's bring up the data for you to see how markets across Asia are responding, and you will see some strong gains across the board and a lot of color that matches the blazer that I'm wearing this day. The Nikkei up 3.5%. Australia, the S&P gaining more than 1%. The Seoul Kospi up 1.75%. And in Shanghai, you see about 2.6% gain. And here in Hong Kong, a gain of about 5.8%. I should add that on Wednesday, China shares had their best day in years on the back of the announcement from Chinese officials that they pledged to boost the economy. They also pledged to stabilize the markets. Earlier on in the week, we saw quite a sell-off, a heavy sell-off in Chinese shares over concerns over the ongoing COVID outbreak in China. The current one is the largest one China has seen since the start of the pandemic in Wuhan in early 2020, and also concerns over tension between the U.S. and China over Russia and the ongoing conflict in Ukraine. Now, from Asia, we're also keeping an eye on U.S. futures. Let's bring up that data for you. And on Wednesday, U.S. stocks rallied. It was a volatile day of trading. Right now, you see a mixed bag. NASDAQ futures up about 0.1%. Dow futures down 0.1%. S&P 500 futures also down by a similar margin. Now, analysts say that the impact of the invasion by Russia on the war of Ukraine, on the related sanctions as well, the impact that's all going to have on global economic growth is unclear, but they're also urging investors not only to be cautious, but to stay balanced. I want you to listen to this.
We would argue that the hardest decision right now is to do very little and actually think more around about being balanced in portfolios. So it would be a case of being very patient when it comes to being an investor and just holding firm when it comes to sort of a more neutral stance in portfolios rather than moving out of risk assets completely, given that there isn't a clarity around exactly what might happen in the coming weeks or months.
All throughout the conflict, the war in Ukraine, we've seen prices of energy, of commodities soaring, including commodities like wheat, a key export from Russia and Ukraine. And all this could weigh on global economic growth if consumers say, do you know what? We want to hold back on spending. Back to you, John.